Pablo, good to see you. How you doing? How you been? Joe, good to see you as well. Evening. How you doing? How you been? Tall, good to see you as well. Evening. How you doing? How you been? Mike, good to see you as well, brother. How you doing? How you been? How's everyone doing today? Free Velvet, good to see you as well. How you doing? Evening. How you been? Billo, good to see you as well, brother. How you doing? What's up? CMF, let's go below. Bullish XRP news. Well, there's been a bit of XRP news happening. So we have the Brazil XRP ETF news to essentially go through on tonight's live, and SEC news to go through on tonight's live as well. The SEC has started to dismiss cases, ironically. A lot of people assume that it's going to be difficult to dismiss any sort of cases with the SEC unless we get an actual chairman coming into the SEC rather than Mark, who's the acting chairman of the SEC. But it turns out that the SEC has the power under the acting chairman, Mark, to dismiss cases. They just dismissed their first crypto case, which we're going to go from tonight's live as well, which is also an indication that not only are they dismissing cases, which is the first one they dismissed, but they're also pausing cases one by one regarding the crypto cases. This is all extremely bullish news regarding the SEC side. What's up, Miles, or what's up, CMF? Good to see you all, Max. Good to see you all, Kerry. How you doing? How you been? But yeah, so quite a bit of essentially XRP news to go towards the end of the live, definitely. Manny, good to see you all. How you doing? Evening. How you been? Hi, Miles. G, good to see you all. How you doing? How you been? Dennis, hi, Miles. CMF. Good to see you all. How you doing? How you been? Hello, Miles. Johnny Bravo, good to see you all. How you doing? How you been? Hi, Miles and CMF. Stormy, good to see you all. How you doing? How you been? What is the Brazil news? I saw a tweet from Brad. The Brazil news is related to an XRP, the first ever XRP ETF being approved in Brazil's market space, happened today, which is why Brad was excited about it and tweeted about it as well. Miles, what chances are there that XRP doesn't do what it's supposed to do and doesn't reach its estimated price points? It's a great question, and I'll answer it straight after the disclaimer of tonight's live. So, welcome to the CMF Live if you're watching this for the first time ever. The CMF stands for Crypto Miles Family. My name is Miles, and I go by the persona Crypto Miles. I'm the host of this live that you can tune in Monday to Friday. And I talk about the most recent news that's happening around the world in terms of cryptocurrency, CBDCs, AI, politics, and regulations. Vital information for you to know about regarding the world completely transforming into a digital space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. We also do Q&As on this live, which means if you do have any questions, put it down inside the comment section. I'll be more than happy to help you out. Now, the first essentially thing we're going to be going through is Johnny Bravo's question regarding on XRP's topic, and then we're going to go essentially straight into the news of tonight's live. There's a bit of news spinning around in terms of the crypto space, in terms of where could we be headed, perspective news on Bernstein's side, or XRP news, or essentially ETF news, or SEC news to go through on tonight's live as well. And I just want to take a second just to say thank you so much to everybody who's retweeting this live right now on X, CMF members. I just got a Stormy just retweeted. Dennis just liked put a reply down as well. Thanks so much to everyone who's right now putting a comment outside the live on X, liking this live and retweeting this live. Thanks so much to everyone that's doing that right now. If you haven't done it, go and do it quickly and come back into the live. And also, thanks so much to everyone on YouTube who's watching right now who's also like the live as well. Now, let's go straight into the comment section first, and then we go straight into the news, which is quite a bit of news essentially to go through on tonight's live. So, yeah, let's go through the comment section first. And the first one I am going to be answering is Johnny Bravo's news. Johnny Bravo's question. Johnny Bravo said, Miles, what chances are there that XRP doesn't do what it's supposed to do and doesn't reach its estimated price points? In my particular point of view, according to what I've read so far from day one until now, in terms of PDF documentations for centralized banks, the Bank of International Settlements, the International Monetary Fund, or any institution out there that has some ties with Ripple or partners of Ripple, it doesn't seem like XRP is ever going to fail. In my eyes, XRP is never going to fail. an XRP 100%, or even in my eyes 1 billion% will reach its targets. Not overnight, but over time, XRP, in my eyes, 1 billion% will reach its targets. That's according to what I've read since day one until now, in terms of contracts, in terms of institutional testings on XRP or the XRP ledger, or institutional testings of banks, or essentially the International Monetary Fund, the Bank of International Settlements, the World Economic Forum, and the list just goes on. So in my eyes, it's never going to fail. And XRP will 100%, 1 billion%, 1 trillion% reach its targets. So I hope that's some confirmation there for you. Good evening, Miles, and good evening. Hope fine. Let's go, Mal. How you doing? Good to see you as well. Good evening, Miles, the CMF. Bull XRP, good to see you as well. How you doing? How you been? Morning, Miles, the CMF. Shelly, good to see you as well. Morning. How you doing? Hi, Miles. How's things? It's great, artistic. Good to see you as well. How you doing? Good evening, brother Miles and CMF family. Let's go, funky brother. How you doing? Scott, let's go. How you doing, brother? Hi, Miles. Hope you're well. I'm doing great, Zach. Good to see you as well. How you doing? Good day, Miles and CMF. Let's go, Scott. Finally, some thought-provoking questions. Nice one, Johnny. Let's go. But yeah, in my eyes, XRP is 1 trillion% going to reach its targets. The targets that are set out for the XRP ledger, for XRP, for Ripple, 1 trillion%, it's going to reach it. Good evening, Miles and family. Orphan, good to see you. How you doing? How you been? Miles, I've seen a Bitcoin Maxi video today. OMG, they really hate XRP and Brad. Yes, they do. The Bitcoin Maxis hate everything to do with the crypto space except if it's involving Bitcoin, which is a ridiculous thing to do, to be fairly honest. Morning, Miles and CMF. Solomon, good to see you. How you doing? How you been? Miles, everything goes great for XRP. How will the holders benefit from holding XRP, or will they have to sell to make money? Well, Johnny, over time, you have two options. You can either sell your XRP for profits and then use those profits for, whatever you want to purchase in life. It could be a car, it could be a house, it could be a villa, whatever essentially your heart desires with your XRP money. Your second option for using XRP is borrowing against it and using as collateral to skip on taxes. So depending on your jurisdictions, if you do sell certain crypto assets or any crypto asset, you could be liable for taxes. But if you borrow against your XRP or any other digital asset and use it as collateral, you don't get taxed on debt. So you have two options down the line. You can either borrow against your crypto assets or sell them for profits. It's completely up to you. None of this is financial advice at all. Now, is staking an option for long-term profits? Staking is also a third option you can use for long-term profits. If you want to do that, why not? Just depends if the staking is going to be enough for you regarding the rewards you're going to be getting. But yes, that's also an option as well. You could do partial staking, partial selling, partial, borrowing against. It's completely up to you. How much will XRP be worth by the end of June? Well, it depends on 3 green lights, and after that, pretty much sky's the limit. The first green light, the case needs to be dismissed. The second green light is regulations due to XRP's client base of how XRP is going to be used as a medium of payments. The third green light essentially being the adoption rate after pretty much the rules and regulations. After that, the sky's the limit. So I can basically tell you at June, XRP is going to be sitting at $10 because it all depends on essentially the case getting dismissed ASAP, then the regulations coming in from the SEC or CFTC altogether, and then the adoption rate happening. What will XRP be worth, sir? XRP will be worth an incredible amount once it gets 3 green lights. First green light, XRP case dismissed or settled. Second green light, rules and regulations from the SEC or CFTC laid out so institutions know exactly what they're doing, or even banks inside the United States, so the rest of the world could also follow their footsteps. And the third one essentially being the adoption after the rules and regulations, which banks are ready, institutions are ready, Wall Street is ready, the world is ready, to be fairly honest. But yeah, 3 green lights. Just keep your eyes on that. Evening, Miles and CMF. Pierce, good to see you. How you doing? How you been? What dates can we expect the case to be over? I said particularly I think the case should be over first quarter to second quarter. I said the first 100 days are the most crucial parts of a presidency, and Trump has done a lot for the crypto space so far. And today he did something else for the crypto space, which we're going to go through, which is incredible. But the first 100 days is the most crucial part. But I also did say that first quarter or second quarter, the case should be over this year. Hello. Okay. Pierce, good to see you. How you doing, brother? How you been? Now, first news on tonight's live is regarding Coinbase. Coinbase is, and it's also regarding to, the case, essentially the cases regarding the SEC and the rules and regulations part. So the second green light, in other words. Coinbase Coinbase's CPO urges US Congress to act on crypto regulations now. So Coinbase once again has came out and said to the SEC, or Congress in this sense, to act on cryptocurrency regulations ASAP because the US is slowly starting to fall behind again. Coinbase is pushing Congress to pass legislations that provide regulatory clarity for cryptocurrency industries, arguing that essentially inaction leaves consumers vulnerable and drives essentially innovation overseas. In a two-page statement, Coinbase's chief policy officer, Fayoz Shahrzad, emphasized the urgent need for a framework that fosters responsible innovation while protecting investors. Shahrzad highlighted that blockchain technology and digital assets offer economic opportunities, financial inclusion, and innovation. However, without clear rules, developers face uncertainty and consumer lack of essentially proper protection. Blockchain and digital assets are just technological advancements. They open doors to financial freedom, innovation, and economic empowerments. Shahrzad wrote, he warned that the United States risks losing its leadership in blockchain technology as companies seek friendlier regulatory environments abroad. Shahrzad outlined several key priorities for legislations aimed at establishing a balanced regulatory framework for digital assets. First and foremost, there is a need for clear definitions that differentiate between securities and commodities, which has confused the entire crypto space for the longest time, and other types of tokens as well. This clarity is essential for providing certainty both to investors and developers in the rapidly evolving digital landscape inside the United States. Additionally, there is strong support for essentially granting the Commodities Futures Trading Commission oversight of the crypto spot market, particularly for major digital assets classified as commodities. In other words, Shahrzad from essentially Coinbase, the CPO of Coinbase, is telling Congress that, you know, if we want to move things a lot more faster, we should get the CFTC involved a lot more when it comes to this processing of rules and regulations, or processing cases, or even defining what is a security and what is a commodity. The Securities and Exchange Commission should also establish a definite guidelines on that allow blockchain projects to raise capital without categorizing every token as a security. Under Gary Gensler's authority as the previous chairman of the SEC, he was trying to say if any crypto project is designed to raise any sort of amount of money, it could be through ICOs or any sort of other methods, they could be considered securities, where now Coinbase's CPO is coming out telling Congress that that shouldn't be the case. And if you're raising money for a specific project inside the crypto space, it doesn't mean you're a security in any sort of a way. It just means you're trying to raise money to bring some innovation into this space. In terms of stablecoin regulation, they should also ensure transparency, full backing, and oversight that promote competition, innovation, while preserving consumer confidence, Shahrzad wrote. According to Shahrzad, effective legislations must be simple and accessible while integrating with existing financial regulations. He argued that the lawmakers clear pathways for developers to build decentralized systems without unnecessary restrictions. At the same time, centralized exchanges and custodians must be held to high transparency security standards to protect consumers. I agree 100% with that. Shahrzad also stressed that consumer protection does not mean over-regulation. I also agree with that. Excessive restrictions could drive blockchain developments offshore, weakening the US economy and limiting consumer access to crypto markets. Instead, Shahrzad calls for a framework that safeguards investors while allowing DeFi and other innovations to thrive. Shahrzad warned that without swift action, the United States will continue falling behind in the global blockchain race. Developers and businesses will look to other jurisdictions with clearer policies, and consumers will remain also exposed to fraud and systematic failures. Passing comprehensive cryptocurrency legislations, Shahrzad argued, will protect essentially consumers, encouraging responsible innovations, and position the United States as the leader of blockchain technology. Look, I agree 100% of everything Shahrzad has essentially said. Every single thing that Shahrzad has said, pretty much. Congress needs to come in and step in and start, helping the SEC or CFTC come together even faster. Now, the SEC has said that they want to, join forces with the CFTC, and CFTC has pretty much said the exact same thing. And the last time they did this, as I said previously, was a decade ago, when they both came together, CFTC and the SEC, to pass essentially, and they're only doing this just to move things along much more faster inside the cryptocurrency space. But I agree 100%. Congress needs to step in a lot more. They need to essentially pass the Congress needs to step in a lot more quicker and pass some stablecoin regulations, bring in some more transparency, and bring innovation ASAP to the United States. Now, to be fairly honest, the SEC is doing the best they can under, laying the foundations and the crypto task force they've created. So there's a lot of things they have done, and they do need to do a lot more. So I completely understand where Shazza is coming from Coinbase. Transparency, rules and regulations, Congress needs to step up ASAP, 100%. Now, on the topic of Coinbase, Coinbase is facing a new lawsuit, and it's not from who you think. So previous cases inside the cryptocurrency space have always been SEC versus Coinbase, SEC versus Ripple, SEC versus Kraken, SEC versus Crypto.com, pretty much SEC versus everyone inside the blockchain space. But that was under Gary Gensler. So this new particular case that's just been, went against Coinbase, it's not from the SEC. It's from one of the investors in Coinbase. And it's an interesting one. So here it is. Coinbase faces a new lawsuit from shareholder over bankruptcy risk and trading practices. Now, you might be thinking to yourself that Coinbase isn't going bankrupt, so why are they being sued by one of their shareholders? Well, it's the way Coinbase has drafted, apparently, according to this person, their regulations, which is this. Coinbase is facing fresh legal troubles as shareholder of Coinbase has filed a lawsuit accusing the company of misleading investors about bankruptcy risk and engaging in undisclosed trading practices. So what does this person exactly talk about? Is Coinbase about to go under? Is Coinbase about to do a Chapter 15 or Chapter 11? Not really, but if they did, something could happen to your assets. And this is what this shareholder is trying to sue Coinbase for. So the lawsuit filed today in a New Jersey federal court by plaintiff Wendell Gu claims Coinbase failed to properly disclose that customer assets could be classified as a part of its bankruptcy estate. If true, this would mean retail users could be treated as unsecured creditors, putting their funds at risk in Coinbase's hands. And if Coinbase ever does go bankrupt, Coinbase can belly up everybody's assets and they wouldn't be liable for it due to their terms and conditions. Geo argues that while Coinbase has marketed itself as a secure custodian for crypto assets, which in a way they have, they say use Coinbase wallet, for example, it's secure for custodian your assets as a hot wallet, Coinbase wallet, or even Coinbase itself, it's secure to store your assets on it. But then again, according to this particular shareholder of Coinbase, if Coinbase ever does go under in terms of a bankruptcy, then what happened to the whole marketing about keeping your assets safe on Coinbase? So Geo argues that while Coinbase marketed itself as a secure custodian, it downplayed significant risk tied to its operations. The points to the collapse of over 75 crypto exchanges before Coinbase's 2021 essentially IPO, highlighting the lack of investor protections. Additionally, the lawsuit alleges that Coinbase engaged in unlawful essentially trading using corporate funds to trade crypto without properly informing investors. So there's two parts to this case. One is that this shareholder of Coinbase is suing Coinbase due to Coinbase lying to people about how their assets are safe on Coinbase. But according to Coinbase, if they ever do go bankrupt, they can take your assets from you, even though they market themselves as a custodian. Now, again, this is not according to me. This is according to this person that's suing Coinbase as a shareholder. The second part, the reason why he's suing Coinbase, is that Coinbase was using shareholders' money without their approval to trade on. So the lawsuit also targets key Coinbase executives, including CEO Brian Armstrong, CFO essentially Alice, and co-founder Fred. It claims they essentially, along with other high-ranking officials and board members of Coinbase, profited from investor knowledge by selling millions of company stocks while aware of Coinbase's vulnerabilities. This lawsuit adds to Coinbase's mounting legal challenges, which include a revived class action case in New York, where essentially customers claim the exchange illegally sold unregistered securities, but that's just a lot of BS. Coinbase is not selling securities, so that could be tossed out. A US judge essentially recently ruled that the case initially dismissed in 2023 can move forward. And additionally, customers in California and Florida filed a lawsuit in May 2024, alleging that Coinbase and Brian Armstrong faced the sale of unregistered securities. That case can also be tossed out as well. Meanwhile, Coinbase's legal battle with the US SEC, essentially, which has stretched for nearly 2 years, could soon essentially come to a reaching point or a turning point. And the SEC has requested an additional essentially 28 days to review Coinbase's appeal, essentially claiming that this newly found crypto task force for cryptocurrencies by the SEC, and essentially Hester Peirce being in charge, could pause a lot of essentially crypto cases inside the SEC battle of blockchain and so on. But that's an interesting one. A Coinbase shareholder is suing Coinbase because apparently Coinbase has been lying to everyone, to the retail section and to their shareholders. And he's a shareholder of Coinbase. He said that Coinbase has been lying to the shareholders because they're using insider information and using shareholder money without their permission, apparently. And that Coinbase has been marketing itself as a custodian to keep your assets safe, your crypto assets safe. But in reality, under the terms and conditions of Coinbase, if they ever do go bankrupt, your assets are not really protected in any sort of custodian that they can use your assets for bankruptcy. In a legal manner, you could say, because if it's in their terms and conditions and everybody's accepted Coinbase's terms and conditions while using the exchange to trade and store cryptocurrencies, then that means you've accepted if Coinbase ever goes bankrupt, your assets are also gone and they're not really in some sort of custodian for Coinbase or protected in any sort of a way. So this is a bad case for Coinbase if it turns out to be true. So there's always two stories, there's always two sides to every story. This shareholder could just be pulling things out of his, essentially, he could just be trying to, go up against Coinbase just for a quick suing, a quick payday. We don't know. But whatever he is saying, if it turns out to be true, then Coinbase needs to change their terms and conditions because they're marketing as a custodian to keep your assets safe. And if it turns out to be true, then your assets are not ever safe on Coinbase because they'll use your assets when they go bankrupt, even though they advertise themselves or market themselves as custodian. And you can also argue the point of, yes, we know if any exchange ever goes south, your assets are gone. That's fair enough. But when an exchange markets itself as this is a custodian way you can keep your assets safe, and then in the terms and conditions, it says, if we ever go bankrupt, your assets are also gone. That's wrong. So I get the argument of, you should never keep your assets on an exchange. And then essentially if the exchange goes bankrupt, your assets are gone. That's fairly understandable. But if an exchange is advertising themselves as a custodian, and then in the terms and conditions, it says something else, that's wrong. So again, I don't know if there's any truth to this matter, but there is essentially a lawsuit going on right now for shareholder of Coinbase and Coinbase itself and Brian Armstrong and everybody else pretty much at the executive board of Coinbase. So let's see how that goes as time passes. But again, this is exactly another indication of why you shouldn't hold your crypto assets in exchanges, because things can go south. If you hold your assets on essentially, a cold storage wallet, a lot of people might say to you, don't rush into cold storage wallet, which particularly you should never rush into anything. But I think cold storage wallet is the only option that you should be looking into to really secure your crypto assets, to be fairly honest, because that's not the solution regarding Coinbase. But anyways, putting the Coinbase story essentially to one side completely, let's talk about a new thing that's happening in Australia, which is that Australian institutions are about to get access to cryptocurrencies. Australian institutions, which is a big play right now. The next clientele entering the crypto space have always been, it's been said that it's going to be institutional clientele. Coinbase has said this, Binance has said this, Grayscale has said this, Standard Chartered Bank has said this, many other high-profile banks and institutions, executives, CEOs, board members have all said next clientele is going to be institutional clientele, which is why they've essentially decided to launch a blockchain, essentially a crypto platform for institutions in Australia. Now, before we go through that news, let's go inside the comment section first, and then we go straight into that news. And as I said previously, this is live, which means if you do have any questions, put it down inside the comment section. I'll be more than happy to answer any questions you may have. So let's go inside the comment section first, and then we go straight into the next news. Johnny Bravo says, Miles, I read an article stating that 5.8 million or so hold XRP, but 5.3 million have less than 5,000, does that mean the majority of the wealth will be with a limited number of holders, or will the price go so high? Johnny Bravo, are you talking about in terms of wallet holders? 5.3 million wallet holders is what you're talking about? Or 5.8 million or so hold XRP? And 5.3 million have less than 5,000. Does that mean majority of the wealth will be limited number of holders, or will the price go up so high? The price will go up no matter what, because it's going to be used as a medium of payment. XRP is always going to be used as a medium of payment. In terms of the wallet holders, that will also increase straight after the case getting dropped, straight after the regulations coming in, and so on. So don't worry, is what I would say. You don't need to hold a lot. And yes, you don't need to hold a lot. I said this before as well. A lot of people say, I don't have enough money. I don't know if I should go for XRP or so on and so on. And I always tell people, even if you have £10, £20, or $10 or $20 a week, a month, just buy XRP, not financial advice in any sort of a way. But in the long term, it will work out. It's better than buying Bitcoin. Because if you spend $20 a month buying Bitcoin, maybe in about 100 years, you'll turn a profit, if you're lucky. But if you spend $20 a month or $20 a week buying essentially XRP, you will definitely turn a profit, because it's incredibly cheap for what's going to become. Hello, Miles. Richard, good to see you. How you doing? How you been? Greetings, Miles and CMF. Good to see you. Lena, how you doing? How you been? Hi, Miles and family. Golden Dragon, good to see you. How you doing? How you been? Mashallah, how you doing? Absolute Knowledge, good to see you. How you doing? Just another reason why you don't keep your assets on exchanges. Facts regarding the Coinbase scenario. Let's go, JP. Evening, Miles and CMF. Ray, good to see you, brother. How you doing? How you been? Kerry says, does this affect the Coinbase wallet as well? Yes, up to a certain extent. Mainly it's for the exchange, but it could do, yes. What cold storage wallet would you, Miles, recommend? Now, I don't want to be any sort of I don't want to be biased in any sort of a way, but if you are looking for a cold storage wallet, I am sponsored by Tangent. So if you want to get a cold storage wallet, you can go to Tangent and use code CryptoMiles to get 10 to 15% off your essentially purchase, and you can use the code as many times as you want to purchase as many wallets as you want from Tangent, and you always get 10 to 15% off Tangent wallets if you use code CryptoMiles in capitals, my name in other words in capitals. And they are the best, to be fairly honest. I mean, they are definitely the best and the easiest to use if you're especially beginner when it comes to cold storage wallets by a mile. And the safest, in my opinion. They've never had any sort of issues or any sort of compromisations. Ledger has been compromised once or twice, but that was only because through the DeFi apps they essentially introduced. But Tangent has never been compromised, ever. Not saying it's never going to get compromised, because you never know down the road, but for the time being, it's never been compromised. XRP drops soon. Case? Sure, definitely. First quarter, second quarter. I just brought another 500 XRP today. 500,000 XRP today. Let's go. That's amazing. Let's go carry. I missed the Coinbase situation. Please, a quick review. Scott, no problem. Coinbase is essentially being sued by one of their shareholders due to Coinbase lying about how they don't really secure your assets, according to one of the shareholders of Coinbase. That Coinbase markets itself as a custodian for holding crypto assets safe, but if they ever do go bankrupt, in their terms and conditions, it states that they can take your assets with them on the bankruptcy. So you should never keep your assets on exchanges. Another reason why you should never do it. In other words, is what it is. I used Tangent ever since Miles mentioned it last year. I am pleased with the product too. Let's go, Scott. Tangent, facts. Let's go, absolute knowledge. Now, Australia. Australia is about to get involved in the world of digital currencies, but the institutional space of Australia is about to get involved. So here it is. Revolutionary crypto options, ZCAP, essentially zero cap, unveils CoinDesk 20 index products in Australia. The CoinDesk 20 index, or the CD20, is a benchmark in the cryptocurrency world. It's not just essentially another index. It's a carefully curated, essentially, of the cryptocurrency market's depth. And essentially think of it as the S&P 500 or the Dow Jones for the digital asset space. And that It tracks the performance of the top 20 essentially major cryptocurrencies, ensuring a diverse representation of the market space. This includes giants like Bitcoin, Ethereum, as well as XRP, Solana, Cardano, and a few essentially other crypto projects as well, which is going to be available to the institutional space of Australia now. Now, what about essentially crypto options and options of financial derivatives that give the buyer the right, but not the obligation to buy or sell the underlying asset? So this is essentially a version of an ETF, you could pretty much say. So if the institutions do buy any of these assets through this zero cap essentially as available to Australian investors, institutional investors, they don't really own the assets. It's similar to an ETF. And in this case, essentially the underlying asset is the CoinDesk 20 index itself. Zero cap essentially is creating a structured products that utilizes these options and structured essentially pre-packed investment strategies based on a single security or a basket of securities and options indices, commodities, debt issuance, and or foreign currencies, and occasionally derivatives. Zero cap decision to essentially launch these structured products isn't arbitrary. It's a strategic move to cater to the growing sophistication and demand within the digital asset investment space. So here are some key essentially reasons behind this launch that's happening in Australia right now. Diversification. The CoinDesk 20 index inherently offers diversification across 20 leading cryptocurrencies. This reduces the risk associated with investing in single digital assets. So institutions in Australia can essentially purchase a basket of cryptocurrencies through this. Sophisticated investment tools. Structured products offer more complex investment strategies than simply buying and holding cryptocurrencies. Options in particular can be used to generate yield, hedge against essentially market downturns, or speculate on price movements with defined risk. Institutional demand. Institutional investors are increasingly seeking regulated and structured ways to enter the crypto market in some sort of a way. Zero Cap, being an essentially established Australian company, firm is well positioned to meet this demand and compliant and professionally managed products. Market maturity. As the cryptocurrency market matures, there is a greater need for a wider range of financial products beyond spot trading. Options and structured products are a natural essential progression in this evolution inside the crypto market space. Zero cap launch of CoinDesk 20 index crypto options structured products marks a significant step forward for the Australian digital asset space. Investor landscape. By offering sophisticated and regulated investment vehicles, they are helping to bridge the gap between traditional finance and the crypto market space. This initiative not only provides new opportunities for investors, but also signals the increasing maturity, essentially when it comes to the cryptocurrency space in Australia and globally. As the demand for a diverse and sophisticated crypto investment product grows, expect to see more initiative solutions emerge, further shaping the future of finance. So, Australia is some sort of way about to be opening its doors to the cryptocurrency space for the institutional sector, which is a big move. It's a humongous move for Australia. Australia has been very silent in terms of their regulations, in terms of ETFs, in terms of CBDCs, but this is a big move. Australia is about to get access to the institutional side of the cryptocurrency space, and 20 cryptocurrencies are available for all institutions in Australia to purchase, even as a basket of cryptocurrencies, they can purchase it. And including essentially in those, the 20 assets that have been mentioned, the assets are, for example, Bitcoin, Ethereum, XRP, Solana, Cardano, and there's a lot more to it. But it's about 20 crypto assets that is available to Australian institutions to purchase whenever they want. Or they can essentially purchase it as a basket of cryptocurrencies instead of going for one by one, which is incredible to see. And on the topic, essentially, of the maturity of the crypto space, it's definitely there. The crypto space is slowly starting to move away from the whole meme coin craze to a more mature market space, which it should do. Because if the crypto space wants to be taken seriously by institutions and banks, and some people might disagree with that. Some people might say, we don't need the banks or the institutions, but we do because they have all the money. And that's just pure facts. So here's a perspective from Nick Carter that just came out today. And he said, the meme coin craze is unquestionably over. As crypto heads towards a much more mature category. The era of meme coins, he said, as supposedly fair trading opportunity is unquestionably over. According to Nick Carter, a partner at Castle Island Ventures, a VC company in other words. Nick Carter essentially said, and he argued that meme coin tokens have little to no utility beyond essentially speculation trading, were initially attractive because they appeared to offer an even playing field for retail investors. However, with recent scandals such as the Libra coin, the market has been overtaken by insiders pre-launching deals and bot-driven trading and leaving everyday traders at a disadvantage. It's true. A long time ago, when meme coins originally started trading, essentially, meme coin trading originally started inside the cryptocurrency space, it was a slight, even essentially playing field in the meme coin space when it first started. Over time, the meme coin space became filled with bots and scammers and big whales or essentially hedge funds that were also scamming people from the retail section. So the meme coin space went from this small level playing field to a now corrupt and overpopulated bot place essentially. And in perspective from Nick Carter is that we're moving to a much more mature essentially market space, and that the meme coin craze is coming to an end, which is great. He said the entire premise of meme coins was that they are a fair launch opportunity where retail had just a good shot as funds as VCs, Carter wrote, which is true. Originally, when meme coins were essentially introduced, everybody had a fair chance. Nowadays, when a meme coin is launched, the people that launch it are pretty much holding about 50% of the asset, 40% of the asset, or 30% of the meme coins, and they drop it on everybody. But originally, meme coins weren't like that. For example, when Shiba Inu launched, there wasn't massive whales holding Shiba Inu when it was launched. It was just launched. There was a time period where meme coins were genuinely fair. But now we got to a stage where meme coins is just scam. From the day it starts, it's just a scam, any project. So always the shareholders who start the meme coin are holding 40% of the asset and they drop it on everyone. But it was never like this inside the meme coin space. It was actually a fair launch. Times have changed. And he said that was an exposed as a lie, and the casino wasn't fair. In other words, the house always wins. Whoever launches the meme coin always wins. The house always wins. A quote from a casino. Carter pointed to the launch of essentially Milei's Libra coin, for example, the president essentially of El Salvador, of Argentina, which essentially opened at a $1 billion market cap before briefly spiking to $4 billion as an example of how insiders now dominate the market. Such an unfair essentially launch, he said, have turned meme coins into a casino where the house always wins. While Carter thinks that the recent trading frenzy that started since the US President Donald Trump started his Trump meme coin is over, he did note that the industry isn't going to disappear. Rather, that it will still likely be a few new token launches here and there, and there'll be some winners and some losers inside the meme coin space, but that the majority of the crypto space is starting to move away from meme coins because more people are catching on to the idea that they're just versing bots, and it's a losing battle when it comes to meme coins. He said, as confidence in meme coin fades, Carter expects regulators to take action against insider trading in the sector as well. Just because meme coins probably aren't securities doesn't mean there is no liability associated on such a trading on inside information. He said, predicting that blockchain transactions histories will lead to a future law enforcement action. Looking ahead, Carter believes that the market will shift towards more sustainable and fair token launches, and high pre-launch valuations have become less attractive, and projects are adapting essentially of offering low initial valuations to attract buyers. Platforms like Echo, which essentially enforce the KYC when it comes to meme coins, all likely to gain popularity for pre-launch and fundraisings and helping projects dispute their tokens more fairly. Meanwhile, Carter expects increased legitimacy in DeFi tokens as well. With the SEC crafting clearer rules for token issuance, he sees a future where tokens can openly generate and return essentially capital to users. The trade of the next few years is simply assessing the fundamentals of these tokens and buying those trades as reasonable essentially valuations and relative to their real or impelled cash inflows. While some traders may essentially laminate the end of the meme coin gold rush, Carter argues that the market is simply maturing. and that the pain essentially of disillusionments is real. But riding over ourselves of meme coin sector, which was in hindsight tremendously unfair, is a good development overall. Now he is essentially Nick Carter is quite an essentially intelligent person. He's a partner at Castle Island Ventures, a VC company essentially, and he has stated, which I agree 100%. Look, as I said previously, the closer we get to rules and regulations, the more utility projects are going to thrive. So if you're somebody that's stuck in meme coins still till this day, if you want to sell your meme coins somewhere down the road where they do gain some essentially high values, then fair enough. But if you're somebody who's actively trading on new meme coins that are getting launched every 5 seconds, you're about to miss out on utility gains. So what Nick Carter is saying is facts. And what's interesting is if we are, in fact, moving away and maturing inside the crypto space, that means that's no hate towards this project, but that means that projects like Solana, who thrive on the meme coin space, what's next for them? Because there are certain crypto projects out there that are the backbone of meme coins, and Solana is the backbone of meme coins. So what's next for Solana if there's no meme coins? As we progress, meme coins start to die out, just like the NFT space died out. Nobody thought NFTs will ever die out. Everybody thought NFTs will stay around forever. And we saw NFTs go from $5 million price tags to $100. So have we got to a stage where meme coins are starting to die out the closer we get into regulations, and that the crypto space is genuinely maturing, and that we could be expecting capital essentially coming in from institutions due to the regulations that's coming towards us as well? Time will tell, but I have said before, the closer we get to regulations, the more you want to be in utility projects. But I agree with Nick Carter that if we're not maturing, we should be maturing if we want to expect new money coming inside the crypto space from institutions and banks. Now, a groundbreaking crypto signal has just been made by Charles Schwab. Charles Schwab has said that they're going to be launching a new crypto platform, trading platform, in May, which is an estimate, but they are going to be launching it, which is incredible, to be fairly honest. So here it is. Just like how essentially Australia's institutions are getting ready to buy cryptocurrencies, it seems like America is about to be introducing a lot more crypto platforms for institutions. So here it is. Nate, the CEO of the ETF store, a prominent voice in the wealth management space. Nate highlighted that Charles Schwab's the creation of the digital assets role, interpreting essentially is a strong signal that the brokerage giant is gearing up to offer crypto spot trading services to institutions. Charles Schwab's a titan essentially inside the US financial service industry, managing trillions in assets. Venturing into crypto spot trading would be a game changer. And here's why this seemingly simple, essentially personal move is sending ripples of excitement through the crypto communities. For example, validation of crypto's maturity. As you can see, we're going back to the topic of crypto maturity. Nick Carter is correct, and I've said this for a while, that we're about to go into a much more regulated market space. So validation of crypto's maturity if Charles Schwab is about to be launching this platform. A traditional financial powerhouse like Charles Schwab's entering the spot essentially trading arena signifies a major step in cryptocurrency journeys towards mainstream acceptance. It suggests that crypto is no longer viewed as a fringe asset class, but as a legitimate investment opportunity. And that increased accountability. Charles Schwab is essentially a vast user base encompassing millions of retail and institutional investors would gain easier access to crypto spot trading. This influx of new participants could inject significant liquidity into the cryptocurrency space, enhanced competition. Charles Schwab's entry would intensify competition among brokerages offering crypto services, potentially leading to lower fees, improved platforms, and a wider range of cryptocurrency products for investors, Well, if Charles Schwab is about to be introducing a crypto platform for institutions in America and even for their retail section in America, that will definitely push other institutions like Charles Schwab's to enter the fields as also, because these mega corporations are all about making money. And if they see Charles Schwab's about to be pulling this major move, and they do flip a humongous profit, which they will, because they're going to be offering a lot of services, not just Bitcoin ETFs and Ethereum ETFs. They're going to be offering a multitude of cryptocurrencies, just like Australia is about to be opening its doors to 20 cryptocurrencies for institutions, similar. So imagine the impact. One of the largest and most trusted brokerages in the US potentially opening the floodgates to crypto spot trading. It's massive. This isn't just about adding another platform to buy Bitcoin or cryptocurrencies. It's about a profound implications for a broader crypto market trends and the future of finance. Charles Schwab's wouldn't be the first traditional financial institution to tip its toes into the crypto waters. We've seen increasing institutional crypto adoption in recent years, for example, like MicroStrategy, a publicly traded company that has been essentially purchasing Bitcoin at any price points, or Tesla briefly held Bitcoin on its balance sheets and accepts payments for some of its products, or even hedge funds and asset managers. Numerous hedge funds and traditional asset managers have allocated portions of their portfolios to cryptocurrencies. And banks offering crypto services. Several banks are starting to offer crypto custody services and explore other crypto-related offerings, which is true. Charles Schwab wouldn't be the first one. But you know what it will be the first one in? Offering a platform for you to buy crypto assets. Like Binance, for example. So Charles Schwab wants to develop a platform similar to Binance or Coinbase and offer cryptocurrency services to their client base. They have trillions of dollars of assets under management, and they're about to be opening the floodgates of their investors to the cryptocurrency space. That news is beyond bullish. If Charles Schwab does this, other institutions inside the United States will follow their footsteps eventually, which will lead to other institutions outside the United States following Charles Schwab's footsteps as well. It's crazy. However, Charles Schwab's potential entry into the crypto spot trading is particularly significant due to his sheer scale and retail focus. Unlike institutions primarily essentially serving high net worth individuals or corporations, Charles Schwab caters to a vast segment of everyday investors also. This could essentially give access to crypto in a way that previous institutional crypto adoption wave wasn't able to. So what should crypto investors make of this development? Well, preparing for a potential market shift is one of the things that you should be aware of. Because if Charles Schwab is about to be doing this maneuver, creating a crypto platform to offer their client base, humongous client base, crypto services, to be able to buy spot crypto trading services. So not just Bitcoin ETF or Ethereum ETFs, actual spot trading, just like Coinbase does it or Binance does it. Prepare for a potential market shift is what you should be thinking about. Charles Schwab's entry could lead to increased market volatility in the short term as the market reacts to this news. However, in the long run, it could essentially contribute to a greater stability and maturity for the crypto space. Essentially, evaluate your portfolio. Consider how increased institutional crypto adoption might impact your existing crypto portfolio and investment strategy. That is the most vital part of this. Look, the more institutions, I've been saying this for about 2 years now, the more institutions enter the crypto, the more institutions that enter the crypto space, the more we go into regulations, which is what's happening right now. You really need to start thinking about your crypto assets and your portfolios. This is why I said a long time ago that you want to be choosing crypto projects that will benefit with the rules and regulations and institutions coming in. Look at your crypto portfolios and think to yourself, me holding this particular crypto asset, do I think when the floodgates open, like Charles Schwab's opens the doors, do I think institutions are going to run towards this asset that I'm holding in my portfolio? If the answer is no, then you know what to do. And if the answer is yes, you also know what to do. Because I'm guessing there's a lot of people out there that are holding useless crypto projects in their portfolios. You want to position yourself correctly. It's key to making an incredible amount of wealth. Institutions are coming in to buy legitimate crypto assets. So position yourself essentially accurately would benefit you a lot in the long run, because the more money that's going to be allocated towards legitimate assets, you just have to consider that fact. So evaluating your portfolio is absolutely key when Charles Schwab is about to be entering the market space and offering a platform similar to Binance and Coinbase. Consider how increased institutional crypto adoption might impact your existing crypto portfolio and investment strategy, so evaluate your portfolios. Consider diversification. As the crypto market evolves, diversification remains key. Explore different essential cryptocurrencies and digital asset investments and options to manage risk effectively. Where you want to be positioned in is essentially financial projects, or American also crypto projects. You want to be positioned in XRP, XLM, XDCs. Charles Schwab's we're talking about. They're not going to be offering essentially some random crypto projects. And Charles Schwab's essentially move to create a head of digital assets positions is essentially undoubtedly a significant signal. Where it's not a guarantee of immediate crypto spot trading services, it strongly suggests that the brokerage giant is seriously considering and preparing for a deeper dive inside the crypto world of digital assets. For the crypto community, this essentially development offers a powerful dose of optimism and reinforces the narrative of growing mainstream acceptance. If Schwab's does indeed launch a crypto spot trading, it could mark a watershed moment, propelling crypto further into the financial mainstream and essentially ushering a new era of institutional crypto adoption. It's facts. If Charles Schwab does this, they launch their platform and they have trillions of assets under management, which is incredible also. They're going to be offering the service to their vast client base of retail and institutions. It's definitely going to put crypto on the map, 100%. Even though crypto is already on the map, but it's going to put it on the map even more when an asset essentially management company like Charles Schwab's releases a platform into the world, just like Coinbase or Binance, for example, and offering spot trading for crypto assets to their vast client base. If they do it, the rest will follow them like a domino effect. And then the world, in terms of other institutions around the world, will follow their footsteps. I mean, Hong Kong, South Korea, and Tokyo and the UAE and Singapore and the EU are waiting to see what America does next. They're not only going to be following essentially Trump's footsteps in terms of the crypto space or any executive order he does sign, but they're also going to be following American footsteps in terms of American institutions on what they do next inside the digital space. BlackRock essentially offering ETFs, the first trend that started. Other institutions around the world decided to introduce ETFs as well. Why? Because BlackRock did it. Same goes in this scenario. Charles Schwab introduces a crypto platform or crypto services like spot trading. Other institutions around the world are going to follow their footsteps as well, which means more capital will be entering the crypto space, more capital on crypto projects you're holding. But it only depends on what you're exactly holding, because they're not going to be going for random crypto projects. Now, the next thing we're going to be talking about, so moving on from Charles Schwab's news, which is incredible news, to quantum computing, which has always been a sore subject inside the crypto space. We first essentially heard about quantum computing essentially last year when it was getting a bit more mainstream news on quantum computing. And as time progressed, we heard about computer chips and there was a quantum computing coming out. And then, this year we heard about the Google chip that was essentially introducing some sort of quantum computing. Well, Microsoft is about to be introducing its own chip as well. So, crypto, quantum computing on collision course as Microsoft debuts its new chip. Now, when Google introduces new chip, the Willow chip, which is a quantum computing chip, people inside the cryptocurrency space became a bit shocked or surprised or scared. And I said, there's nothing to be scared about, because quantum computing can actually be used to advance blockchain technology. It can also be used to go against it, but it can be used to go essentially and advance blockchain technology. And I also said, the more they move along on quantum computing, the more essentially certain blockchains, some blockchains, are securing themselves even further, so things like quantum computing wouldn't affect them over time. So, but here is the new one, Microsoft. Microsoft has just unveiled its first ever quantum computing chip today, joining a suite of other companies pursuing the technology that could one day change everything. Microsoft's merger one is built from a mix of semiconductors and superconductors, and according to the company's use of essentially matter different than the three commonly known solid, gas, and liquids. And according also to the CEO and chairman of Microsoft, this breakthrough will allow quantum computing to be created in years rather than decades with the Microsoft chip. In an interview with Bloomberg, Microsoft Executive Vice President Jason Zander noted that the theory was first introduced in Microsoft back in 1937 regarding quantum computing, and is now ready for practical use. So since 1937 until now, they've been doing some sort of thinking process, and well, now they've released the quantum computing chip, their first ever chip. It's taken us nearly 100 years to prove it, and now we can harness it. Microsoft's findings were published in the academic journal Nature today as well. Nature publishes pre-reviewed research about science and technology, and some speculate that the new chip could eventually advance fields like chemistry, healthcare, or even be used for essentially power data centers, which is definitely needed for AI. So again, quantum computing is not only positive for blockchain, but also positive for AI. The quantum chips process information differently than obviously your regular chips, and Microsoft began essentially working on this project in the early 2000s, and it considered the longest running research and development project within the entire company. And quantum computing in general could pose a threat to cryptocurrencies down the road, according to some sources, but in reality, it shouldn't. And Google's Willow computing chip also generated some conversations in crypto circles after it was announced in December 2024. And as essentially Cointelegraph's magazine reported, a key concern is that the advanced quantum computing chip would be able to break certain types of crypto chains, affecting, for example, Bitcoin or even other cryptocurrencies. For instance, someone could execute a 51% attack by mining Bitcoin with a quantum computer or guessing at a essentially Risk wallet's private key. And the history of cryptography is one of the essentially change and adoptions to new attacks, faster computers, and better algorithms. Bitcoin's researcher, for example, Ethan, told Cointelegraph, so the grand challenge for those working on Bitcoin's cryptography right now is how do you protect coins over a decade or even centuries, given the nature of quantum computing? Well, I can tell you this, there's a lot of people working on multi-share crypto chains. For example, Ripple is always working on the XRP ledger. Cardano is, Charles, the founder of Cardano, is always obviously with his own team and developers, always, protecting their chain. There's a lot of essentially CEOs or companies behind blockchain projects that are trying to protect their chain and advance their chain as much as they can and secure it. But when it comes to Bitcoin, it's the Bitcoin developers and the node developers and everybody else that's Bitcoin Maxi's job to protect the chain. So good luck with that one. I'm being fairly honest, because the more we go into quantum computing, the more, for example, Ripple is going to protect the XRP ledger from ever getting compromised, because the XRP ledger is going to be used as, the XRP is going to be used as a medium of payment. The XRP ledger is decentralized, so it's built on it, connected to banks, institutions. So the more we move along, companies like Ripple will protect their chain, the XRP ledger, as much as they can from threats like that, if they ever do occur. When it comes to Bitcoin, there's not really any company behind it. So it's the people that are Bitcoin maxis that have to protect Bitcoin's chain. And in terms of what Microsoft has said, which is we're not that far off from quantum computing. It could be within years, not decades anymore. So the Bitcoin maxis have a few years to protect the Bitcoin chain as much as they can and continue maintaining the chain as time progresses. Because if they don't, quantum computing will definitely be able to penetrate through Bitcoin's chain over time if they're not protecting it properly. But again, look, this is the benefits of, for example, Ripple and XRP. Ripple will always maintain the security of the XRP ledger, no matter what. Same goes for essentially Cardano, same goes for AVAX. These are all company-based blockchains, which means they'll always try to protect it no matter what. And they're always trying to update their security no matter what. But Bitcoin doesn't really have anybody standing behind it, no company behind it. So it's up to the people, the Bitcoin maxis, to protect the chain. And I'm not sure I could trust that. Because then you're just trusting random strangers you never met to protect the chain. That's a bit of a risky one. I can trust Ripple to protect the XRP ledger. It's a company. They have a lot of money. They can hire a lot of people. But can you really trust random strangers online to protect one chain? It's just a thought. Because even, a Bitcoin researcher, Ethan, who did an interview with Cointelegraph, said, the people that are essentially looking after Bitcoin's chain really have to look after it when quantum computing chips get released officially. Because there's no company behind Bitcoin to protect it. Now, the idea of companies behind blockchain projects seems more interesting, doesn't it, for people out there? Because inside the crypto space, people would say, XRP Ledger is, XRP Ledger is Ripple, so it's not decentralized, even though it is. But they say it's not decentralized and so on. It's centralized and so on. And there's companies behind AVAX. It's a company behind XRP. It's a company behind Cardano. It's a company behind, for example, Neo or Hulo or whatever. All these blockchain projects, there's companies behind them, so it's not really decentralized. Bitcoin is the only one that's decentralized. Well, yes, there are companies behind them. Not that they're not decentralized, because they are. The XRP ledger is definitely decentralized. But yes, there are companies behind them. But is that really a bad thing now when quantum computing is around the corner? Just a thought. Now, sweeping presidential oversight. Trump's executive order is about to be reshaping federal agency control. Trump has just signed another executive order. This was a big one. This is the one where Trump or Trump's administration takes full control of this SEC, the CFTC, the essentially the FCC and the FTC, all of their decision makings in terms of what they do moving forward, in terms of regulations, policies, and so on, which is incredible. Which means that if the SEC decides to move slow or pass the wrong regulations, Trump's administration have the final call on the matter. That's incredible. Before we go through that news, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions, put it down inside the comment section. I'll be more than happy to answer the questions you may have. So let's go inside the comment section first, and then we talk about the recent executive order he signed regarding Trump, and what does it really mean for the crypto space, because it's a massive positive. But let's go inside the comment section first. So I read that XRP retailers, Scott says that I read that XRP retailers will be priced out. Is that correct, Miles? Please explain. So in terms of getting priced out, in terms of the topic of getting priced out of your XRP, look, the only way, I've said this before and I'll say it again. So there's multiple ways that they'll push people out of crypto assets. It can be by manipulation or panic selling, putting fear in people's hearts to sell their crypto assets. But another way for institutions to get people to jump out of XRP is just by raising the price. The institutions don't need to manipulate the market space too much, because naturally the retail section will jump out of certain crypto assets. So the whole topic of getting priced out, it's a possibility, but it all depends on you. You're the end user. So if you decide to jump out, it's completely up to you. Not saying you should or you shouldn't in any sort of way. Anybody watching this is not financial advice in any sort of a way. But the topic of getting priced out, if the price increases a lot, there's a higher chance of a lot of people jumping out, which goes back to the original argument that I've always made, which is institutions don't really need to manipulate the market space too much, because naturally the retail section will jump out. XRP goes to $10, for example, a lot of people from the retail section will jump out. XRP goes to $50, a lot more will jump out. Some people might not saying everybody's going to jump out, but some people might. By the time XRP gets to $100, I think the majority have jumped out from the retail section. So only the strongest will be holding above $100. Would you recommend a tangent ring? No. Maybe. I've been thinking about to get one as well regarding tangent ring, but I don't know about the safety reasonings of, do I want my crypto wallet on my finger? So if anybody doesn't know, Tangent has introduced the Tangent ring a while ago, where you can have your crypto wallet, for example, on a ring, and then you can just, tap your phone on it and do transactions, or tap your phone and transfer assets. But I'm not sure if I would want my wallet on a ring for safety purposes. But I am starting to warm up to the idea. Who knows? I'll be honest, I'm 50-50 on the whole Tangent ring. Would I recommend it? I'm starting to warm up to it, I'll be honest, Hi, Miles, a bit late here on tonight's shift. What's happened with Coinbase? Coinbase is being sued by one of their investors, by one of their shareholders, because apparently Coinbase has lied to everyone using Coinbase that they're not holding people's assets and custodians, and instead, if they do go bankrupt, they do take your assets with them. And they're also being sued because the shareholder is claiming that Coinbase is using people's money and trading with it. Their shareholders trading with it. The shareholders' money, not the retail section. But again, that's just according to one person that's suing Coinbase as a shareholder. But there's always, as I said previously, there's two sides to every story. When is going live Australia? When is it going to go live in Australia in terms of the platform that's going to be launched for Australians? It's going to be, if not mistaken, second quarter or third quarter. Hi, brother. I've been listening, but I just got the chance to enter the chat. Let's go, Kamal. How you doing, brother? How you been? Pierce says, should I sell my ACH off for XRP Miles, in your opinion? If you want to, XRP is a much more superior asset to essentially ACH. ACH, being inside the financial sectors and the financial category, multitude of licensing is incredible, essentially, asset as well. But XRP is far more superior. So if you want to, why not? Not financial advice in any sort of a way. If you want to go for more XRP. Talking facts, Miles, I've had this company's backing argument many times with BTC Maxis. Let's go, Mac. Regulations are just around the corner. Let's go, JV. They are. I'm all in, so I'm okay. Correct. I'm not panic selling. No, you're all in. You're good to go. You can't get priced out if you already have brought in. If you know what you hold, you will essentially percentage sell your way out as a best strategy, wouldn't you? Me, no. Personally, I've always said since day one that I'm never ever going to sell my XRP. I've said this since day one. People could say, no, he's going to sell somewhere down the road. Me, no. I'm never ever going to sell my XRP. I've said this since 2 years ago. I'm never going to sell my XRP or my XLM. I'm going to be using it to borrow against it and use it as collateral. Not all of it, but I'll use some of it to borrow against and use it as collateral to skip on taxes and use it for the best ROI I can. But yeah, in general, I'm never going to sell my XRP, not even pot by pot or percentage by percentage. But again, that's also an option for anybody out there that wants to. Just because I'm doing this doesn't mean you have to follow my footsteps in any sort of a way. The methods of, trying to bring in that profits factor for yourself. You can sell your assets pot by pot in terms of if you want to say your XRP somewhere down the road and, bring in some profits. You can borrow against it. You can stake it. It's completely up to you. Not financial advice in any sort of way. But my preferred way is I'm never going to sell my XRP, ever. You can put the ring in a chain. That way nobody will be safer. Great shout to be fair, Miles. Let's go back. Now, the sweeping, essentially, presidential oversight from Trump. This was a big one. So here it is. In a move that's sending ripples across Washington, D.C., former U.S. President Donald Trump and current president, essentially President of the United States, has signed an executive order designed to significantly increase presidential oversight over US federal agencies. This isn't just about bureaucracy essentially reshuffling, it's about a power play that could redefine how these agencies operate, including those with significant impacts on cryptocurrency space, like the Federal Trade Commission, the FTC, or the Federal Communications Commission, the FCC, and the Securities and Exchange Commission, SEC. So due to this new executive order that Trump has signed, the Trump administration, or Trump himself, has we could say, the final word or the final power over the decision-making from these agencies. The core aim of this executive order, as outlined in the White House fact sheet released essentially today, is to centralize control within the presidency. The administration argues that the so-called independent agencies have been operating way too much by themselves and enormous power over the American people without a presidential oversight. It's true. If this executive order existed before and Trump was in power before, Gary Gensler would have never been able to sue Ripple or Binance or Coinbase or Kraken, saying that Trump should have been in power beforehand as well, not Biden. But if this executive order existed before, Gary Gensler would have had no power. So with this new executive order, Trump and Trump's administration have the final verdict on any decision-making, major decision-making, from any of these essentially, from any of these decision makers from these major agencies. Because Trump, in Trump's words, that these agencies like the SEC, the CFTC, the FTC, or the FCC, or the CFPB, or the FDIC, they have too much power of the American people, and that a president administration should be looking above, essentially looking over them, just in case they do so many sort of dodgy maneuvers. So the administration argues that the so-called independent agencies have been abusing their powers for the longest time. And this order seeks to change that by implementing 2 directors for all federal agencies, with a very limited expectation for the monetary policy functions of the Federal Reserve. White House review of draft regulations. Every agency, including those previously considered independent, like the FTC, the FCC, and the SEC, must now submit their draft regulations to the White House for review. Any law that's going to be passed, any regulation that's going to be passed by the SEC from now on, has to be sent to the White House. Trump or Trump's administration will look at that regulation, and if they find it viable, they'll pass it. If they reject it, it goes back to the drawing board. So this means no more flying under the radar. The president's office gets the first look and say, essentially, in the proposed rules. The consultation on priorities and performance standards. Agencies are mandated to consult with the White House on their strict plans and priorities. Furthermore, the White House will now be setting essentially their performance standards higher. This is a significant shift towards aligning agency objectives with the presidential agenda. Essentially, this order seeks to ensure that the president's vision is reflected in the actions of these agencies. That's the key sentence right there, that the president's vision is reflected in the actions of these agencies, which means Trump wants a pro-America for cryptocurrencies. Trump wants essentially the capital of cryptocurrency to be America, which means if those agencies aren't aligning themselves, well, it's not going to be a good day for any of them, because any law that's about to be passed by the SEC or CFTC, Trump gets the final verdict, which is great. This also means there's going to be a lot more pressure on the SEC to move faster and the CFTC to move faster in terms of cryptocurrencies. So accountability, for example, what are the several benefits, the several potential benefits of this executive order? Accountability. By increasing White House oversight agencies, the agencies become more directly accountable to the elected president and by extension to the essentially electorate. Now, this could lead to policies that are more in line with the administration's mandate. Policy coherence. Centralized review can help ensure that the regulations across different agencies are more aligned and coherent, reducing conflicting policies and streamlining governance. Efficiency. The White House could potentially drive agencies to be more efficient and focused on key priorities by setting performance standards and overseeing strict plans. Responsiveness to the public's will. A more directly overseen agency might be more responsive to the broader public because President Trump is looking over them. Which means if the public are requesting something from these agencies and these agencies are independent and they don't want to listen to the public in any sort of a way, well, Trump is going to force them to listen to the public because it's the public that elected these people. This is good. With this executive order, Trump is putting the power pretty much back into the people's hands, you could say, and into his own hands, which I trust, to be fairly honest. He's the only president I trust by a mile. So for those in the cryptocurrency world, the implementations of this executive order are particularly noteworthy. Agencies like the SEC, the FTC play crucial roles in shaping the crypto regulations in the United States. And the SEC is at the forefront of regulating digital assets, determining which cryptocurrencies are securities and enforcing securities laws in the crypto space. Increased White House influence could mean a shift in enforcement priorities. Presidential priorities could influence the SEC's enforcement agenda, potentially leading to a tougher or more lenient stance on essentially on cryptos, depending on the administration's views. Now, the current administration's views on cryptocurrencies is that America is going to become the capital of cryptocurrencies, and innovation is about to stay in, which is amazing, which means pro-America, pro-crypto, pro-Trump. It's incredible, honestly. Changes in regulatory approaches. The White House might push for specific regulatory frameworks for crypto, potentially accelerating essentially the pace of regulations when it comes to cryptocurrencies, accelerating the regulation for cryptocurrencies. Impact on innovation. Depending on the direction, increased oversight could either essentially provide clearer rules for crypto businesses to operate within essentially the cryptocurrency space, which is incredible. Trump's sweeping executive order marks a significant shift in the balance of power between the presidency and the federal agencies. Whether this leads to a greater accountability and policy coherence, or to politicizing or stifled essential expertise, it remains to be seen. For the cryptocurrency world, it introduces a new layer that highlights the importance of understanding and engaging with evolving regulatory environments. The increased presidential oversight means that the political winds in Washington, D.C. could have more direct and immediate impact on crypto regulations than ever before, which is what we needed. We needed a direct route when it comes to crypto regulations and Trump's administration or Washington, D.C. in general. Trump is just pretty much connecting all the pathways together for cryptocurrencies to move faster. And staying informed, essentially and adaptable, will be essential for navigating this new era. This is lost for words, pretty much. Amazing, incredible. Because first, signing an executive order for America to become the capital of cryptocurrencies was a major green light for all the agencies to become pro-crypto. Straight after that executive order, the SEC essentially became instantly pro-crypto. Even though Gary Gensler left, and overnight they did create a crypto task force, but the CFTC became pro-crypto, the CFPB became pro-crypto, the FDIC became pro-crypto. The multitude of all these government independent agencies that just became pro-crypto after that first executive order. But now, to keep them pro-crypto, with this new executive order, Trump's administration or Trump himself have the final verdict, which means that things are going to move a lot more faster in terms of crypto regulations, and that there will be no negativity moving ahead when it comes to cryptocurrencies or anything else, because the people have the power again, once again, because in the past, it was us versus the SEC. Everybody was shouting on the top of their lungs against Gary Gensler. Everybody inside the crypto space was standing against Gary Gensler. They were telling Gary Gensler, you're harming the crypto space. rather than trying to protect investors. People were saying we don't need Gary Gensler's protection. People were going against him in every single sort of a way. And Gary Gensler didn't want to listen to the same people he's trying to protect. And we didn't need his protection inside the crypto space. Well, with an executive order like this, the agencies have no choice. All the American agencies have no choice but to listen to the public once again. Because let's not forget, the people are the ones that elected these people to those chairs, to those seats, to those boards, to Congress, to Senates, to presidents. So therefore, the people should have a voice, which is what Trump has given the people now. Trump has given the people the voice, which means all these government agencies have to listen to the people, which also means that they have to listen to Trump's administration and Trump himself. All the agencies have to listen to him. This is definitely going to help cryptocurrencies in a major way. It's a major leap for cryptocurrencies, major leap, because no longer they're all independently working together. They're actually not going to be working together. They have no choice. I mean, best president pretty much in history, you could say. Some people might still hate him, but you can't lie. That's a brilliant move. But as I said previously, thank God Trump won. Because I know what the executive order for Kamala Harris was going to be. Shared bathrooms. As if that was going to do anything for everyone. Now, the NASDAQ is what we're going to talk about next. Honestly, that was only going to be Kamala Harris's only priority in the United States. But now, before we go through the NASDAQ, which is the next news we're going to be covering on tonight's live, which also goes back to the whole institutional space. Let's go start the comment section first, and then we'll go straight into NASDAQ news. Let's see where we're inside the comment section. I'm going to go straight into NASDAQ news. But this is unreal. It's an incredible piece of news that just came up. Incredible piece of executive order. Woohoo for Trump. Let's go autistic. Donald Trump is a draft-dodging coward, is what USMC 8506 has said. Okay. If you borrow against, this is what Orphan said, if you borrow against, it's even possible if the value of the asset drops, let's say around the value that you borrow, can the institution take the asset away from you? Yes and no. So if you borrow against your crypto assets, for example, the simplest way I can explain it is, so for example, imagine you borrowed against your crypto assets. Your assets are sitting here. You borrow against your crypto assets. If your assets go below the level that's essentially, you borrowed against, the platform that you borrowed against, or the bank that you essentially borrowed against, would say to you, you need to add more collateral. If you don't add collateral in the time period, then they do have the right to take it away, or you can pay back the money that you borrowed. So there's options on the table. You can pay back the money you borrowed. You can add more collateral, so essentially you stay within the limits. So there's multiple ways to go around it. But if you don't add collateral and you don't pay back the money, then you do lose your assets. So it's something definitely to consider. Trump is what Tim says. Let's go. JP says Trump is going to have his eyes on everything. Facts. Absolute facts. This is why he's a great president, honestly. This is why Trump is a great president. Because he wants to, be on top of everything. Every maneuver, every movement, every decision. This is what a great president is supposed to do. Everybody in America chose this man to do exactly what he's supposed to be doing. And he's doing it. He's the only president. If this was Sleepy Joe, he'd be on vacation in the Bahamas right now, sleeping on a beach somewhere. Or if this was Kamala Harris, for example, if she won the presidency, whoa. I mean, that would have been a cold day in hell. But if she won the presidency, Kamala Harris would have probably been in Ukraine right now, supporting it, to send more money to it. I don't know, something on those lines. But this is what a great president is supposed to do. Looking after everything and everyone. Now, NASDAQ. NASDAQ essentially proposes a new rule, going back to the whole cryptocurrencies and institutions, because it definitely is the next wave. It's 100% the next wave. NASDAQ has proposed a new rule to allow the trading and listings, essentially, of investment products linked to digital assets. This is also major news. So NASDAQ is proposing a new rule for crypto listings and investments. And the proposal suggests adding a new rule called NASDAQ Rule 5712. So if anybody wants to go and check it out, it's the NASDAQ Rule 5712, which would let companies list securities backed by digital assets. These include securities from companies holding digital assets and investment interests based on cash, derivatives, or other sources. It also essentially proposes moving the NASDAQ Crypto Index US ETF to this new rule from its current listing category. The filing mentioned this proposal aims to amend representation regarding the investment objectives and strategies of the NASDAQ Crypto Index US ETF, made in the rule change previously filed with the approved by the Securities and Exchange Commission relating to the trust. The cryptocurrency investing company, Hashdex, is in charge of managing the essentially NASDAQ Crypto Index US ETF. And according to the registration statement, the fund's primary holdings are Bitcoin and Ether for now, but it may also own other digital assets based on US crypto legislations, which means the next crypto assets is going to be owning, or is already owning, or we don't know, is going to be American crypto assets, which is going to be XRP. Which also, Trump tweeting about Brad on Truth Socials was incredible to see. Now, on the topic of NASDAQ presidency, Trump. US President Trump is preparing to do a brand new deal with China. You see, China has no choice but to come to the table now. You see, Trump has got Russia on board. Trump wants to end the Ukraine war. Now, interesting enough, when Trump, this is just 1 second. So when Trump wasn't in power, when the Biden administration was in power, everybody, Republicans or Democrats, wanted the war to end in Ukraine versus Russia, because everybody was tired from every country of sending billions of dollars or pounds or euros to Ukraine. That could have been Democrats or Republicans or liberals or independent parties. Everybody was unanimously coming together and saying, well, the majority, about 99% of people were coming together and saying, stop the war in Ukraine and Russia and stop sending them billions of dollars. And this wasn't just, the thought pattern in the US. It was the same thought pattern in the UK, in the EU, and so on. And from the retail section, just to clarify, from the retail section. That was the thought pattern. Stop sending billions of dollars to Ukraine of our taxpaying money. Interesting enough, now that Trump is the president of the United States, Republicans are still in favor of stopping the Ukraine war and sending them billions of dollars. But there's people coming out, and I'm not saying everyone's coming out, but I'm saying there are people coming out from the EU, the retail section, from the UK, the retail section, and from the US retail section, and saying, Trump is a traitor. Why is he trying to stop the Ukraine war? I'm sorry, are people in favor of sending their tax-paying money to Ukraine so Zelensky can continue a war that he's never going to win? At what point do people start, going, let's just, start using some brain cells, for example? In fact, I said this once to a person that I care about a lot. I said that, blockchain, Web3, AI, it's all incredible, no doubt about it. But I think we should put that to the side for once and just really focus on building a company that develops brain cells. Because I think a lot of people are missing brain cells. Because how are people in favor of sending their tax-paying money to Zelensky to continue a war, which, by the way, most people were against before the presidency? And now Trump is about to be ending the war. There are people coming out and saying, no, we want to continue the war. For what? There's no results of winning on this war. Ukraine never had a chance of winning this war. Zelensky knows this. The politicians supporting this idea know this. They're only stealing from you. Any politician that's backing the Ukraine war, or Zelensky himself, they're just stealing your money from you. literally stealing your money from. This is going to be a never-ending war of just money laundering. So honestly, if anybody out there is thinking about developing the next AI company or the next blockchain company, please stop. Somebody, for the love of God, create a brain cell company so we can start donating some brain cells to people around us. Because it just logically makes no sense of why you want to fund a war from the retail section perspective. Why you want to fund a war that has no winning whatsoever and your taxpaying money just evaporates. While you're on your own countries, you don't have the security, or you're not going to be able to afford your groceries. You don't have the money to still be able to buy a house or pay your payments on time. You're in favor of a war in a different country. It's just crazy. Honestly, if anybody's out there thinking about genuinely, this is not a joke or sarcasm. If anybody is out there and is thinking about creating the next AI company or the next blockchain company, please stop. Just for a second. And for the love of God, create a brain cell company so we can start donating it to people around us. Because there's something happening, or there's something in the water, because it just doesn't add up. That people are in favor of this war continuing and their tax-paying money going towards it. Now that Trump wants to save the day, the Ukraine war must continue, and that Trump is a traitor. Before Trump, everybody wanted to stop this war. Now that Trump wants to stop this war, Trump is a traitor. Why is he stopping this war? Because you wanted this, but you don't like it because he's about to stop the war. So it's crazy. It's honestly crazy that people went from we should stop this war to now Trump is the man stopping the war, and it's wrong. Why? Because it's Trump stopping the war? If Kamala stopped the war, people would say, oh, Kamala's amazing. This is why I say, if you are the next person out there, the next entrepreneur out there that's about to be creating, an AI company that's going to be revolutionary, or blockchain company that's going to be revolutionary, please stop for a second. Just for the love of God, create a brain cell company so we can start donating to people. It's possible. Trust me. Just figure it out. Because it needs to be done. It's crazy, honestly, that how much people will go against him, even when he's doing the right thing. Because the amount of money they're wasting, they could be using on US vets, for example, that need the money more. So it's all the homeless in the US, and it's just crazy, absolutely crazy. Now, and it's more crazy that the EU wants to continue this war. The EU is broke, standing on its last leg, and they want to fund the Ukraine war. And Zelensky, the best part, the funniest part, Zelensky has the cheek to say to the EU that if the US doesn't back them, that the EU should send Zelensky $250 billion. That the EU, and by the way, where do you think the EU is going to get that money from? You, if you live in the EU. That the EU should send Zelensky $250 billion, while the EU, in terms of France, having an economic crisis on the real estate market space, Germany, automotive industry crisis, and that's pretty much it for essentially, you could say EU, because the powerhouses of the EU are what? Germany, France, Italy, and they're all crumbling. So it's just crazy that Zelensky has the cheek to ask for $250 billion from the EU if the US backs out, because he wants to continue the war that nobody wants to continue. Well, people who have brain cells don't want to continue that essentially war. People who are missing brain cells want to continue that war. This is why I said someone should create a brain cell company so we can start donating to people. So that's crazy in a sense, honestly. Now, on this topic of US, China, Russia, China has no choice but to sit at the seat with Donald Trump. And I said this previously as well. I said this since day one, that no matter which president it is, or which essentially politician it is, or which prime minister it is, they have no choice but to listen to Trump. They have no choice but to listen to Trump. And I said this about China as well. When China introduced tariffing the US back, the US tariffed China 10%. And China said the tariff the US back 15%. And I said, why is China essentially showing power it really doesn't have in reality? Because China lost everything. And by everything, I mean BRICS. It crumbled so fast. The same way BRICS was built up within a day, it crumbled within a day also the moment Trump came into presidency. With Russia now, back to, getting back on that friendship path with the US. Russia's never going to be a part of BRICS anymore. Well, they also did say, Dmitry did say, they're never going to be creating a BRICS token. So China has lost Russia. China has lost essentially India, because both India and Russia are now on friendly terms with the US. And India also said, we're not going to be creating a BRICS token. Russia said the exact same thing. So China has lost their two biggest partners, Russia and essentially India, in terms of BRICS nation. So that fell apart quickly. China has now no choice but to sit at the table with Trump. You see how things work? Even though China imposed 15% tariffs on the US when Trump only imposed 10%, China decided to retaliate with 15% as if that meant anything. And I said, if anybody remembers, why is China pretending that it has any sort of authority or power? Because it doesn't in reality. Not against the US, it doesn't. Maybe other countries, but not against the US, and it never will have either. Especially not under a President Trump. So here it is. US President Trump is preparing for a brand new deal with China. So the Commerce Secretary, Howard, one of Trump's top business essentially allies, has been encouraging negotiations, suggesting that a well-structured agreement could help stabilize economic relations. However, sources closer to the White House say that the administration hasn't settled on its full list of demands yet. China's economic struggles, China has a massive economic struggle going on. It's called the real estate bubble. And if it ever does burst in China, it's going to end very bad. It's going to end very messy for China. So China's economic struggles could make it more willing to negotiate with the US, because the longer China, as I said previously, continues this charade of China is strong and almighty and we don't need the US, the longer they carry on this fake charade, the worse it's going to get for China. So therefore, China has no choice but to accept Trump's demands and sit at the same table. Now that Russia is sitting on the same table, and so is India. They're two best friends for their BRICS nations, which crumbled overnight. The country's property market collapses and slowing down growth have forced Beijing to rely more heavily on exports, flooding international markets with cheap electric vehicles, solar panels, and manufacturing goods. So, remember what I said a long time ago, where if China gets sanctioned, it's pretty much the worst thing that can happen to China. China will crumble. Not saying it'll be, brilliant for the US. If the US sanctions China, let's just say a sanctioning war. The US sanctions China. China retaliates and sanctions the US. Who do you think is going to last longer under sanctions? Who do you think is going to last longer? Because what I can tell you is China is massively relying on exports. China builds and sells to other countries, builds and sells to other countries. If the US sanctions China, that means the EU won't buy from China. That means Australia won't buy from China. It means the Middle Eastern countries won't buy from China. The Asian countries won't buy from China. And now that Russia is pals with Trump again, they won't be buying from China, and neither will be India. So let's just say China sanctions the US back. What's going to happen? Nothing. We'll have some sort of volatility stages inside the market space. The US will be damaged slightly, but that's about it. Because every other country around the world will still work with the US. Even if China sanctions the US, the EU will still work with the US, the Asian countries will still work with the US, the Middle Eastern countries will still work with the US, India will still work with the US, and so will Russia. But the other way around, nobody will work with China. So this is why I keep on saying that China is putting on this charade of we are strong and almighty and we don't need the US. The US says China is going to get 10% tariffs. China will put 15% tariffs on the US. Why? You don't have any sort of power or authority in this scenario at all. And right now, China is heavily relying on exports. And if the exports situation slows down for China, well, that means that China is going to go into a massive economic bubble crisis in the real estate space, which means China's economy will just go, in the most simplest way to put it, it will just tumble down. So China's economic struggles could make it more willing to negotiate. The country's property market collapse and slowing growth have forced Beijing to rely heavily on exports. And if they ever get sanctioned, goodbye exports. And pretty much China as a country goes chapter 11. So US officials argue that this strategy has crippled domestic manufacturing in other countries, making it a key issue in negotiations. Even if you wanted to start negotiations with China, it's going to be very difficult, said Wendy Coulter, a former US trade essentially negotiator. The White House knows this, which is why essentially Trump is using tariffs, potential export bans, and threat of trade status, which could put China essentially into a bigger deep hole. And China is going to get, they're aware of this, but for some reason they want to show that they're almighty and strong. So according to essentially the New York Times, the reports that just came out, Chinese companies are willing to invest in US industries such as solar, electric vehicles, and batteries, and potentially creating up to 500,000 jobs. Would you look at that? Remember when I said about, when this news came out first, when the news first broke out, the US puts 10% tariffs on China, China puts 15% tariffs, and I said it won't last too long in any sort of a way, and China will crumble. Well, it seems like China wants to work with the US. They want to negotiate and have a sit down with the US, and they don't want to do, continue this tariff war because they can't win. As much as the news sometimes might claim they can win, or people on social media might claim China can win against the US, in reality, no, it can't, and it never will, because those people don't understand how the world of politics works. It's a very messy game. And however way you look at it, or any angle you look at it, China will always be second, and the US will always be first. That's just facts. And it's showing that where China is essentially willing to invest in US industries. They're willing to invest in US industries, in the solar industry, in the electric vehicles industry, the batteries industry, and even create 500,000 jobs for US. Beijing is reportedly considering taking minority stakes in joint ventures or even licensing its technology to American firms. So it's got to a stage where China is pretty much begging to be back on terms. Inside China, government officials are cautious. According to reports, they recognize Trump's unpredictability, but also see opportunities in his need to deliver economic wins before 2026 midterms. 13 essentially policy papers from Chinese analysts said that Beijing is closely studying Trump's dual character and recognizing his erratic yet transactional approach to power. But the paper also suggests that if China understands Trump's fundamental political goals, it can exploit his needs for economic wins and extract favorable trade terms. Unofficial back channels between Washington and Beijing have already opened. And with Chinese officials trying to assess also what is Elon Musk's role in Trump's administration. The billionaire, who has essentially a major business interest in China through Tesla, met with Chinese Vice President Han Zheng. And the New York Times reports says that Elon Musk has expressed confidence that the trade deal can be reached with China and the US on common grounds. And Trump himself seems to see the situation as a personal challenge. Unlike other officials who view China as an through ideological lens, Trump views essentially Xi Jinping as just another businessman. See the difference? World leaders sometimes see other world leaders and they panic and they get scared. Trump just views everybody around him as a president or a prime minister as just another businessman. No big deal. But that's good news also for the crypto space, because it means less volatility. So the relevance of the US and China sitting at the same table is less volatility for the crypto space moving ahead, essentially. The faster they come to a deal, which it's going to be very fast because China has no choice, the better it is. Less volatility inside the cryptocurrency space with the whole tariff situation. Same goes for Russia. The faster this war ends between Ukraine and essentially Russia, the better it is. For the crypto space, less volatility. Now, Bernstein is what we're going to talk about next. Bernstein's analysts predict a bright future for cryptocurrencies by 2025. Essentially within this year, by 2026 in other words. Despite ongoing fluctuations in cryptocurrency markets, long-term optimism remains strong this year. With the new government, regulatory pressure on cryptocurrencies has already begun to ease. Furthermore, as comprehensive supportive regulations are developed, recovery should accelerate. Bernstein's analysts believe that significant political and regulatory support this year will bolster cryptocurrencies, particularly advancements in stablecoin initiatives, and the integration essentially of cryptocurrencies with traditional finance are anticipated to pick up pace. And Bernstein isn't lying. They're not the only ones that are saying this. This year is all about the institutional wave. With banks recognizing and integrating essentially stablecoins, expanding into cryptocurrencies will become much more feasible. More importantly, as the stablecoin market grows, the cryptocurrency economy will also expand. An analyst from Bernstein expect the US stablecoin laws will allow major financial institutions to incorporate stablecoin issuance in their business models. The report also anticipates that efforts to bank the unbanked related to cryptocurrencies will gain momentum, enabling cryptocurrency companies to operate more freely. And in some exchanges, discussions began with banks to facilitate cash payments for customers, highlighting the chaos prompted by the collapse of crypto-friendly banks back in 2023. And Satoshi Nakamoto, who created essentially Bitcoin as a free network for cross-border payments, today we are essentially regretfully witnessing the potential benefits of stablecoins in international transactions, which is interesting. Bernstein, which is massive, just stated that stablecoins are about to be taking over Bitcoin's role. The primary use case for stablecoins today is a settlement currency in the crypto economy, both as a trading pair on exchanges and in the lending applications. But we also see new use cases beyond crypto's global remittances and essentially cross-border B2B transactions. The fact that 99% of stablecoins are dominated in the US dollars reinforces dollar dominance in the global network economy, which is facts. I've said this previously before. The more essentially these stablecoins keep on purchasing US Treasury bonds, USDT, USDC, Ripple's RLUSD, for the argument of people who always say the US dollars is going to go away, it's going to go to zero, that's never going to happen. It's going to get replaced by a digital dollar as essentially a stable coin, but it's never going to get essentially go to zero in any sort of a way. And the US dollars will always remain, well, in our lifetime, will always remain number one currency in terms of a stable coin, because the number one stable coins inside the crypto space are USDT, USDC, RLUSD, and so on in terms of stable coins. And RLUSD, USDT, and USDC, they all purchase US Treasury bonds, cash, essentially US dollars in terms of cash, and so on. So for these stable coins to get strengthened more and more, they purchase, the easiest way to put it, items that make the US dollar stronger. So in other words, the US dollar will always remain number one. If it's either going to be fiat form or digital form, which in this case is going to be digital form as we move along, essentially further on in this digital world. But in general, Bernstein is correct, yes. The more we move along with the stablecoin regulations, the more the US dollar becomes strengthened, because all these stable coins, US dollar stable coins, are purchasing US Treasury bonds, yields, and US dollars to make that stablecoin digital, which means every time they do that, it strengthens the US dollars. It's just common sense at that point. So it's true, but the other interesting factor that Bernstein said is that the more we go into stablecoin regulations, the more useless, not my words, and read between the lines of Bernstein's report, it technically states that this is bad for Bitcoin, because in Bernstein's report stated that Satoshi Nakamoto created Bitcoin as a free network for cross-border payments. But he said today, Bernstein said today, we are regretfully witnessing the potential benefits of stablecoins in international transactions, which means stablecoins are about to be taking over the whole Bitcoin atmosphere. To be fairly honest, XRP is taking over that too. Now, moving on essentially from Bernstein's report that came out, which everything they state is facts. We're going towards institutions, regulations are coming even more. This year is all about institutions, and that 99% of stablecoins are dominating the US dollars, just facts. Even in a digital world, the US dollars is still number one in terms of cryptocurrencies. The number one stablecoin is US dollars and will always remain US dollars as the number one stablecoin. Now, SEC. The topic on the SEC is that the SEC has no authority or power to dismiss any cases, because the SEC has an acting chairman, which is Mark, and Mark is just an acting chairman, and that it needs to have an actual chairman to be able to dismiss any cases in the crypto space. Well, that is wrong, because today the SEC has actually dismissed the case, because everybody would have assumed that we need to have an actual chairman of the SEC, like essentially Atkins, to come through, and that Mark, the acting chairman of the SEC, can't dismiss any cases, but he can, because he just did. So that's an indication that Mark can dismiss cases. Also, with that new executive order that Trump signed, where Trump's administration has the final verdict on anything the SEC does from now on, this makes it even better. But here it is. The SEC voluntarily dismisses its case with the Blockchain Association. The first case has just been dismissed by the SEC with an acting chairman, Mark. In a major development in the cryptocurrency industry, the Securities and Exchange Commission, SEC, has voluntarily dismissed its appeals of the lawsuit challenging the dealer rule, which was brought in essentially by the Blockchain Association and the Crypto Freedom Alliance of Texas. The move essentially marks a significant victory for the entire crypto industry, while it also signifies the end of the dealer rule. If you're wondering to yourself, what is the dealer rule? Well, here it is. Blockchain Association's CEO, Christian Smith, welcomed the decision by the SEC, adding that this highlights a shift in the approach at the agency towards crypto regulations since its former chairman leaving, Gary Gensler. It's a new day at the SEC following a former chairman Gary Gensler's crusade against crypto. Today's voluntarily dismissal by the SEC is a welcome news for the entire crypto space. We first brought our lawsuit against the SEC to challenge the agency's unlawful power grab, which sought to essentially literally redefine the boundaries of its statutory authority. So what the SEC was trying to do under Gary Gensler is have even more power over essentially the crypto space. And this lawsuit has just been dismissed. The SEC dismissed it themselves. With new leadership with the Blockchain Association versing them, they dismissed the Blockchain Association case. And the Texas case, they dismissed it. With new leadership at the agency leading towards a final dismissal, we're looking forward to a productive conversation between industry and the SEC moving forward, and a brighter future for digital assets in the United States, she added. The CEO of Blockchain Association, the case was originally filed in April last year, contesting the SEC's attacks on the industry, and essentially it also sought to redefine its regulatory authority, which was criticized by the industry. So if you thought to yourself that the SEC can't dismiss any cases because they have to wait for an actual chairman to arrive, they can. Technically, they can dismiss cases because they just did. Their first ever dismissal in a blockchain crypto lawsuit type of scenario, they just dismissed the Blockchain Association case with the Texas people, with the Texas SAFT as well, which is a massive welcome to the crypto space. And if you're wondering to yourself, why is the SEC not pausing other crypto cases, for example, the XRP case? So this is what's happening inside the SEC right now. So the SEC is actually going to be pausing a lot of cases. But if you wondered to yourself, why isn't the XRP case being paused yet? Well, here's the reason. So journalist Eleanor Tarrant from Fox News has provided insights into why the US Securities and Exchange Commission, SEC, which has become more crypto-friendly under Donald Trump's administration, has not stopped the filing lawsuits against some crypto companies, but they've paused others. Tarrant explained that according to multiple legal sources, the SEC is prioritizing cases with essentially immediate court dates. So the lawsuits that are being paused by the SEC, all the crypto-related lawsuits that have been paused by the SEC, and now one of them has been dismissed, are the ones where the court cases are coming up very soon. So before they go to court, the SEC is going to pause them and dismiss or settle. So this explains why there have been no stays in the ongoing Ripple and Kraken case, because there are cases before them that are about to go into court. Ripple's next court date is set for April 16th, while Kraken's faces a significant deadline on March 31st. Meanwhile, the Binance case was postponed to April 14th, and the Legis case was postponed to April 11th, and Coinbase reached an agreement with the SEC to extend the deadline to respond to the agency's request to file an appeal until March 14th. There is speculation that the SEC's leadership expects Trump's SEC chair nominee Paul Atkins to be confirmed by then. During this transition period, the Crypto Task Force, Congress, and the Presidential Working Group on Digital Assets are reportedly working to address the regulatory gaps that led these lawsuits in the first place. So if you ever wondered to yourself, can they dismiss cases? Yes, they can. But their estimate is that by the time we get to the Ripple case, essentially, which is around April 16th, the next Ripple court date, SEC versus Ripple, is April 16th. If you want to put that in your calendars, put it now. April 16th is when essentially the SEC and Ripple are about to be having a sit-down. Before that happens, there should be a pausing of the case. And before that, there should also be Paul Atkins in place. And if he isn't, that case can still be dismissed by the acting chairman, Mark, because he has dismissed a case. Because a lot of people thought the SEC can't, but they can. And I said they can as well. If they wanted to, they can. In a legal manner with a lot of filings and paperwork, but they can do it. And on a positive note, essentially, that's also a major positive note, by the way, just to be fairly honest, regarding the SEC on the steps they're taking, and regarding executive order of Trump as well, and regarding essentially the case dismissal by the SEC. On another positive note is this. Hashtag has just essentially received an approval to launch XRP spot ETFs in Brazil. So if you're wondering to yourself today, why has Brad tweeted out saying something in Spanish and tagging an article? Well, it's because of this. Hashdex has reportedly received regulatory green lights to launch what would be the world's first XRP ETF. Brazil's Securities and Exchange Commission has approved the Hashdex NASDAQ XRP Index Fund for listing in Brazil. The CVM approved the XRP Spot ETF for listing on the B3 stock exchange, the report stated. However, the exact date of the listing isn't clear. Currently, the ETF is the pre-essentially operational phase, with General Essentially Investments as the fund administrator. Hashdex, whose crypto index ETF received a nod from the US Securities and Exchange Commission on December 19, 2024, applied for an XRP spot ETF in Brazil on December 10th, and the approval of an XRP ETF, spot ETF in Brazil comes under multiple issuers, and the US essentially is also waiting for potential nods from the SEC to give an approval. And these include proposals by Grayscale, Wisdom Tree, Canary Capital's 21 Shares, and many more. And SEC recently also acknowledged the CBOE filing for the Bitwise XRP ETF and another filing for the XRP ETF as well. And while these proposals await the SEC's final approval, Hashtag's XRP ETF could soon go live on the B3 stock exchange, according to Silvio, Ripple's managing director of Latin America. It's about time the first spot XRP ETF hit the market, and that the Ripple executive pointed to the cryptocurrency real-world utility and rising demands across institutional investors as key factors. So the world's first ever XRP ETF, green-lighted. Now, the exact date of when it's actually going to be on the Brazilian exchange, we don't know, but it's going to be very soon. But the first one has ever been green-lighted now, which is incredible news. And on the matter of the SEC getting to a stage where they're pausing every case one by one as they come up to their deadlines, and the SEC dismissing their first ever case, and Trump's executive order to have final verdict on any movements the SEC does, which puts more pressure on the SEC to move quicker and opens up the paths for all the agencies in America to work together, is even better. This is a cherry on top. And on that positive note, so all the positive notes we talked about on tonight's live, we have reached the endings of tonight's live. So if you're watching this for the first time ever, this was the CMF Live. And this is episode 266 of the CMF Live that you're watching right now. And you can tune into this live Monday to Friday, 11:25 p.m. UK time onwards, where I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, and regulations. So if you're tuning in for the first time, tune in Monday to Friday. So tune in tomorrow and the day after, Monday to Friday, 11:25 p.m. UK time. If you're not follow me on X. If you're not subscribed and you're watching this on YouTube, subscribe to me on YouTube, like, comment, share, retweet. Now, before we do go, let's go inside the comment section first, because I don't want to skip on anyone's comments. And then we'll go. If you borrow, actually I read that one already. There you go. A few words. No, I read that one. Okay, we're here. Yeah, thank you, Donald, for securing border, getting men out of women's sports, and finding all the waste and abuse of my tax dollars. Facts. I agree 100%. I heard Ada is coming out with a stable coin. That's an interesting one. It's a possibility. You never know. After what Bernstein has said, does that turn into BTC a stablecoin? No, it doesn't turn BTC into stablecoin. It's just saying that stablecoins are competitors to BTC right now. After what Bernstein said, does that mean that turn BTC into stablecoin? No. It's just that stablecoins are competitive to BTC. This is my fear, that institutions will use stablecoins for cross-border payments and pay a small fee in XRP, and now CBDC is being removed from Ripple's website. Tokenized now is a new narrative. CBDC isn't removed from Ripple's website in any sort of a way. Wholesale CBDC still exists around the world, and it's going to be happening no matter what. So don't have any fear whatsoever. Good night, Miles and CMF. Thank you for all the news and great live. JP, let's go. See you tomorrow, but at the same time as usual. Night, Miles and CMF. Pablo, see you tomorrow, same time as usual. Good night, Miles, and good night, CMF. Till tomorrow. See you tomorrow, same time as usual. Funky brother. Thank you, Miles. Good night, all. Pierce, see you tomorrow, same time as usual as well. Good night, everyone. Thanks, Miles, for all the news you see. See you tomorrow. Orphan, see you tomorrow, same time as usual as well. Thanks, Miles. Always a pleasure listening to you. Have a great night, and see you same time tomorrow. Let's go autistic. See you tomorrow, same time as usual as well. Can the SEC bring the Ripple court case forwards rather than waiting till Ripple's April 16th? The issue is because the SEC is trying to handle everything. They're trying to lay the foundation. They're trying to handle the other lawsuits. There's a lot of things the SEC's got on their plates right now, to be fairly honest. But it's a fair point, but that's what's happening right now. Good night, everyone. Thanks for amazing work, Miles. And let's go, Bull XRP. See you tomorrow, same time as usual. Thanks, Legend. Night and day, CMF. Let's go, Shelly. See you tomorrow, same time as usual as well. Take care, Miles and CMF. Ray, see you tomorrow, same time as usual as well. We appreciate you, Miles. Enjoy your night. All. Let's go, Lena. See you tomorrow, same time as usual as well. Thank you, Miles, for an interesting live. Good night, Miles and CMF. Joe, see you tomorrow, same time as usual. Thanks, Miles. Let's go, Stormy. Good night, CMF. Let's go, Stormy. See you tomorrow, same time as usual. Mike, good day, Miles and CMF. See you tomorrow, same time as usual. I will see everybody tomorrow, same timing as usual. Everybody have a great day or a good night, depending on where you are around the world. This was episode 266 of the CMF Live. Tune tomorrow, same time as usual, 11:25 p.m. UK time onwards for episode 267. If you're not following me, follow me, subscribe, retweet, like, comment, share, and hashtag the XRP Army. See everybody tomorrow, same time as usual. Good night, everyone.